Stock market S&P is bouncing from its 200-day moving average. Perhaps something interesting is going to happen over the short term? Let's have a look at the details. Welcome to My Finance Teacher, where we discuss cycles of a range of assets, including precious metals, energy, and stock market. We're looking at the stock market right now, where the cycles that we usually look at are the intermediate cycles, which usually last for around a half a year or so, and daily cycles, which usually last for a couple of months. And as S&P is bouncing from the 200-day moving average, looks like this previous daily cycle that lasted between late December and the very beginning of March has probably finished, lasting for around 70 days, which is pretty close to an average duration. And we do have a poke below Bollinger Bands. The Bollinger Bands weren't extremely wide, but they were pretty wide. And while we don't have many pokes yet, multiple pokes below relatively wide Bollinger Bands do often indicate a bit of a turnaround in momentum. So a bit of a short-term gain into the next daily cycle, that would be the third daily cycle in the ongoing intermediate cycle, all the way since mid-October, is quite likely. So perhaps a bit of a short-term gain into that new daily cycle, followed by a more significant decline down into the intermediate cycle low, as opposed to the most recent decline over the last couple of weeks into that short-term daily cycle low. And by the way, together with the members at myfinancesteacher.org, we played this short-term decline into the daily cycle low with SH and PSQ, the shorts on S&P 500 and on Nasdaq, pretty successfully, although at the beginning with this volatility around the top, it was kind of hard to hold on to positions. I was stopped out once or twice, but nevertheless we still did expect this usual decline into the daily cycle low, so eventually this short trade did play out. Now perhaps a bit of a short-term trade on the upside, and I don't really expect this rally to last long, as the intermediate cycle is already pretty long. The intermediate cycle has been going on for 140 days. And as these cycles usually last for perhaps on average around a half a year, we are getting pretty close to the later stages of this intermediate cycle, meaning that a bit of a decline down into the intermediate cycle low is quite likely relatively soon, perhaps maybe after a couple of weeks of a bit of a rally, maybe up into that FOMC meeting, perhaps if the Fed decides to hike by, say, 0.25% rather than 50 basis points, but at the same time maybe hints at several more such relatively mild hikes. That might actually drop the stock markets down into that intermediate cycle low. And looking at market sentiment, this is the optimism index on S&P 500. We see that it's declined over the last 3 weeks from above 80 all the way to below 60 right now. It's still not significantly low, but perhaps enough of a decline before at least a bit of a short-term bounce into that next daily cycle. But again, a bit of a caution and stop losses are strongly recommended here, as the bounce isn't likely to last for very long. And zooming into a shorter time frame of this optimism index, this is the optics on SPY, we see that it's pretty volatile, which is kind of more useful to look at the daily rather than intermediate cycles. But as it's volatile, as it jumps all the way from this green dash line to the green red line in just a few days, I do like to look at the 10-day moving average of this optimism index. That's the solid green line, a little difficult to see on the screen. And usually these daily cycle lows, which generally take place every couple of months or so, this 10-day moving average of this optics, the green solid line, does drop to the level of 30 or below. And right now this 10-day moving average is at 27.2. So we are perhaps very close to a bottom, or we have already bottomed, at least for the short term, yesterday on the 2nd of March. So once the markets open, I'll try to play this short-term gain, but again, gotta be careful here with correct stop losses. And perhaps a more interesting play relatively soon will be this short play down into the intermediate cycle low, all the way into the intermediate degree correction rather than a short-term daily cycle bounce. So stay tuned for that as well, and join us at myfinancesteacher.org.